All right. Thank you, Patrick. And I want to thank Ninja Trader for allowing us to meet today and talk to you about what it is that we do here at the Intentional Trader. We have a system of trading that we call pullback trading. We've been doing it now for going on our 16th year. So we're getting pretty good at it by now. So where did I come up with this pullback trading? Like you, I was a struggling trader for many years. I spent so many years trying to learn day trading from, the internet, right? Mentors or trade rooms or books or videos or anywhere I could find any kind of information about day trading. That was my course of action to become a professional day trader, right? But as it turns out, I was a completely horrible trader. You may think you're the worst trader in the whole world, but that was me. I always felt that if I just did the opposite of what I thought I was supposed to do, then I'd be this wildly successful trader. You remember that episode on Seinfeld where George decided to do the opposite of everything he would normally do and his life became perfect? I kind of had that whole idea in my head. Every time I placed a trade, I thought, if I'd have gone the other way, it'd have been a winner. And that's what happened most of the time. So as it turns out, my problem was that I was too reliant on all of that stuff I was collecting, all of that information, all of the people that were giving me, I was relying on them to give me, all this trading information, to give me courage, to give me indicators, to provide the logic of what, of the trades and all of that. But that never worked for me. So I decided to do the one thing that had always worked for me. I was a contractor in my previous life, my previous career, and as a contractor, your main skill and the skill that you get paid for is problem solving. So I thought, you know what? I fancy myself a pretty good problem solver. So instead of looking externally for an edge, I decided to find it for myself. Um, I went and what I found has absolutely changed my life and the lives of a lot of other traders that have also joined our little trading family here. So this is what we're going to be looking for. This that you're going to see this pattern, and there's four setups right there for us on that chart, and we're going to go over those setups and how and why they're setups. Okay. So we've got an obvious trend here, right? And I often get asked, because we even call our trading pullback trading. And the first thing a lot of traders ask is this counter trend trading? And, maybe, but if uh, if you look at this trend line, if I ever took a short during the course of this chart here, am I a counter trend trader? What about now? Would I be considered a counter trend trader if I shorted here? So the answer is yes and no. So which trend do you value? Which is most important? And to whom is it most important? If I buy here, am I a trend trader or a counter trend trader? So when I say we trade pullbacks from a trend, those trends can be long-term trends or short-term trends. Our trades may actually take place in both directions of a longer term trend. So when asked, are you counter trend traders? My answer is always like, well, yes or no, yes and no. We might be counter the short term trend, but trading with the longer term trend or vice versa. But here's the thing, we don't care. That's a big problem for a lot of people. They get stuck in their head that the trend is essential. Hold on just a second. Let me open this chat. Thank you. Okay, so the trend is really not essential to what we do. We're looking for opportunities that present themselves that give us an edge. That's it. So that was one of the things about trying to think through this and be a problem solver on my own. Don't worry about what the rest of the trading world says is the way we should be doing it. None of that ever worked for me. So why do we see pullbacks in every trend? Have you ever asked yourself that? It's really just the nature of the traders in the market. When people or institutions think price is too high, they begin selling to take off some profits, right? Doesn't that make sense? This eventually drives price down to the point where now the traders in the market start to feel the price is a bargain. Time to buy again, right? So there's these price levels where this happens. And this is often influenced by the market makers. The market makers will determine when and how to move price in order to set up the markets in their favor. So let's take a look at how they do this. So when you see prices channeling here, like in the bottom left here, you see prices channeling. You see that nothing much seems to be happening, right? But what's actually probably happening is these institutions, these people with all the money and the ability to move the markets, are quietly gathering up, and they do it slowly and stealthily, and they're gathering up all of the available assets for this particular instrument that they can at a very low price. Now, naturally, they don't want to do it in a hurry because then everybody jumps in and goes, hey, what the heck's going on? Okay. So then after that, what they want to do is they are going to do it to see if they can push that price up. They're going to push price up and then wait there and see, will price hold? Will price hold? Okay, so this is the markup period, and then this is where they make their money. Looks to us, it looks just like accumulation. They start slowly selling things off until they've gotten to the point where they still are controlling of the major assets, and then they mark it up. It shoots up, and then we end up doing it again. Okay, so they made their profit, price pulls back, and they start the process all over again. See if price is going to hold here, mark it up, and on and on and on. Then they do the distribution. That's where they make their money. And then they dump the assets and price drops again. And they do it over and over and over again. So pullback trading, it requires no predicting. I don't do any pre-study in the mornings before I start trading because I don't need to. I only need to react when there is a confluence of conditions in the market that suggest something specific is about to happen. And it's about to happen right now. We don't do any type of market analysis. I don't speculate. I know people come in the trade room and they want to hear what I think about things. And to be honest, what I think about things really doesn't matter because all we have to do is measure every tick coming into the market, how it's coming in, and then provide some technical indicators to read what those ticks mean, and then we have a real good idea what's going to happen. So we don't have to watch TV and watch the talking heads to tell us what they think about the markets. Guessing and hoping is no longer, that was a big part of my trade plan back in the day. I would guess to get into a trade, and then I would hope it would go in my direction. There's none of that anymore. So we don't require that. There's no confusing signals or shades of gray that I like to call it. All of our trades are yes or no. It's not, does this look like this and does this look like this, and then if you have this and this and you put all these together, but this one's not doing this, and then but you look at a different time frame, and we don't have to do any of that. It's all very straightforward, yes or no. The rules are very simple. You just need a good plan and you need to practice because we found the edge. We know what's going to happen. But there's always a flip side, right? The flip side of finding an edge like that means that you have to actually execute, and you have to execute without apprehension. But that's the easy part. Anybody can practice that to gain a skill. Okay. So by reading this confluence of market conditions so that we can just react, we're reading things like momentum, very important to us. Order flow, very important. Whether price is overbought or oversold. So that means we're looking for exhaustion. And then on top of that, the kicker that gets us into the trades is divergence. Okay. And I know a lot of people have tried to trade divergence. I tried to trade it many years ago and I failed miserably at it because I kept missing it. When price and momentum start heading in different directions, that's divergence. So I came up with this trading system that we've been doing for 16 years now. Um, and it was working pretty good until I added divergence. And then we started just killing it. So let's talk about momentum traders. For those of you that don't know, momentum traders typically, you hear you want to, buy low and sell high. Momentum traders do it a little bit different. They buy high and sell higher. Okay, that's kind of their mentality. And for them, momentum is not really a fixed amount or a percentage of the market. It's really relative to recent past conditions in the market. So momentum traders will take advantage of a trend and will trade level to level inside that trend. Okay. So they're trying to capture a strong move based on aggressive buyers and sellers bidding a price up or down by overwhelming one side of the bid-ask spread and setting off a strong move in one direction, usually temporarily or over a short time span. Okay? So as you look at this chart, it looks typical, right? This looks like any chart that you look at on any instrument on any day, right? It's so typical that you've seen it before and you don't even realize that you're seeing that the patterns that you're seeing in here happen over and over and over every single day because they can sometimes hide in there. Sometimes it looks like this going in mostly one direction. Sometimes it'll change directions, but under analysis, it's still the same set of patterns being repeated over and over. So let's zoom in and let's look at that and analyze its parts. All right. So we have an area that's channeling. That's the first thing we look at. We want to see that it could be accumulation. It could be distribution. Whatever it is, we are mostly bored, right? Because we're just sitting around waiting for something to happen, which is what day trading is mostly, is sitting around waiting. So accumulation or distribution, we don't know. We don't really care. Then price breaks out of this channel. Okay. Sometimes it drifts out, but sometimes it jumps out of the channel. That's what we're looking for. We're looking for an increase of buying pressure. Okay. or selling it. We trade it both directions. I'm just showing you this as an example. So momentum traders, remember these guys that buy high and sell higher? This is where they get triggered. And they jump in and buy up as much as they can, as fast as they can. And when I say fast, you know what fast is, right? Milliseconds. So these guys can do that. They can get in and out of trades in milliseconds because they have all the money and all the technology to be able to do that. So they're in and out just about the time that all the retail traders go, oh, what the heck was that? And they start jumping in, trying to buy into this big up move, right? You've never done that though, but I know a lot of traders do. All right. So this is where the buyers now, the people, us retail traders have jumped in, but the real money is out. They're already out now. And so exhaustion has set in. And momentum traders now dump everything as fast as they can before all the us retail buyers are gone. And then suddenly there's this oversupply, which does what? Drives price down, right? So as I'm looking at this, and I know I've seen it 100 times, thousands of times, when I look at my trading charts and it's right in front of me, I kind of have this aha. I had this aha that when I see this particular pattern, and in particular, what I noticed was it's usually after a bar that's much, much bigger than the previous bars. So I noticed, and I'm going to challenge you to go look at a chart and tell me if you don't see these, smaller bars and then a huge bar and then price pull back. Okay, so I thought, whoa, we got something there. What can I do with that? So I started thinking about it. Okay, so what type of trading would that be? I said, I know there's like essentially three types of traders in the market. There's those that do value analysis. They base trades on analyzing the value of a company or an asset. They study things like price to earnings ratio, stock splits, acquisitions, earnings reports, that kind of stuff. And then you've got just the straight up trend traders that use mostly technical analysis, the most important being trend analysis, watching for higher highs and lower lows, that kind of trading. And then we've got the momentum traders that buy high, sell higher. And they buy the and sell the breakouts. And that's caused by this sudden volatility. Okay. So I know these, so this, and so I'm thinking, okay, so where's my opportunity? So I look here and I say, here's a simple line chart pattern, okay, just for illustration purposes. So down here, traders generally feel that price may be a bit undervalued, but nothing is motivating them to either buy or sell. So we see price in a bit of a channel, perhaps drifting up or down, and then a sudden move out of the channel. And that triggers the momentum traders, okay, at these prices higher than they have recently been, and to push those prices even higher for the short, sometimes very short term, where they will then sell to those that are just jumping in at, the big move. They think they're going to ride the rocket to the moon, right? So everybody jumping in, trying to get a ride on this price increase. Okay, and we see it over and over and over again. So after studying this pattern and understanding the types of traders there are in the markets at any given time, I had to ask myself, do I want to try to trade as a trader that has to study and understand all of the value, do all of the analysis and be a value trader? Or do I want to be a trend trader, which for me was horrible? I'd already tried trend trading and found out that I was not mentally or emotionally cut out for riding the ups and down waves. And trying to ride it to the top, buy it at the bottom and ride it to the top. I was just a single contract, small lot trader, and I didn't learn until later that I was never going to make money at trend trading that way. You have to trade multiple lots to make money at trend trading. Otherwise, you're going to get slaughtered. And nobody told me that. And so I was continuously getting slaughtered. Or could I be a momentum trader? Well, obviously you can't do that. You can't jump in and compete with these guys. So what's left? What's left? Well, nobody seemed to be addressing a section where nobody was really interested in. Not the value people, not the momentum people, not the trend traders. Nobody was really interested, particularly the momentum traders. They had nothing to do with that. They were, they're the market makers, the smart money. They're not really interested in that small pullback. In fact, they create it, but they're not interested in it all. They've just finished a round, right? A round of trades, and now their mission is to set up the market to do it again and again and again. So where we're entering right here is in relatively safe, shark-free waters, at least for the short term. At least for the short term, as long as we know when the momentum traders have likely done their thing and they're done. So we kind of need to know that, right? So now just because price is moving up doesn't necessarily mean that it's something of interest to the momentum traders. But it's important for us to know when it is. So we have to take constant and precise measurements inside each and every bar. Okay. So here's an anatomy of a pullback trade for us. Okay. So price is channeling, right? We've got price just kind of drifting around doing nothing. We're trying hard to stay awake. Price jumps out of that channel in a hard way. This is our OBOS indicator, our overbought, oversold. We don't have to have an oscillator down at the bottom of the screen. We put it right here on the bar so you know that that bar is overbought. So what happens when price gets overbought? It price starts getting exhausted. Now, we want to know when the momentum traders got triggered. That's what this is right here. That's our speed tick indicator. In fact, it's so important to us, it's on our logo. All right. Oops, I didn't mean to do that. Let me back up here. We also read every tick. When people say, "Oh, I don't see any volume indicators on your charts." You gotta measure volume, and I'm like, yeah, you gotta measure some volume. We don't measure all volume. We only measure the volume that's important to us, a type of volume. And that's what this does. This is reading volume of buyers and sellers, and not just how many, but how they're trading. Okay. So if the bar starts out and it's mostly buyers and they start trading into where some sellers are sitting and waiting, then we get a churning activity, right? Where the buyers and sellers are fighting it out. Lots of buying and selling in a particular area. That's the volume that's important to me. That's what I want to watch. Okay. So I have an indicator here to tell me when that is happening. And price the momentum traders have been triggered and price is getting exhausted. Okay. So see the confluence of events? This happens all the time. Now, This is our Rockstar indicator, also part of our logo because it's so important to us. And I could do an entire webinar on this, but suffice it to say that when we have all of this strong momentum, all of these indicators, and then on the open of this bar, even though price is moving hard this way, we know that momentum has already changed directions. So price and momentum have gotten out of sync. And when that happens, price will almost always try to catch back up with momentum. Okay. So knowing that, that's where we would place a trade. So on this example, we would put a trade on at the open of that bar. All right. So that's what it looks like down here. And now you can see that it's actually happened several times on this chart. Okay. So let's see what it looks like in action. So this is just these are just some videos from our trade room. It could have been yesterday or it could have been 10 years ago. It doesn't matter because we're doing the exact same thing we've doing for the last 16 years. So there's nothing new to learn. We're not one of those companies where every week there's something new, right? And you have to learn something new and you have to buy something else and no, we just show up every day for the last 16 years and trade the exact same thing, the exact same way. All you got to do is make sure you have plenty of coffee and you're awake and able to exploit when these setups happen. So here's one that happened. We got a speed tick. Okay, price is channeling. Look, price is dropping. Price is oversold, and when it's overbought, it's a pink outline, and that would be up at the top. When it's oversold, we draw a blue outline. Okay, so it's oversold, so we know exhaustion is setting in. We know the momentum traders have probably been triggered. We know that price is churning, that there were probably a bunch of buyers sitting down here waiting for the sellers to sell into them so they could start buying. And now we got a bunch of churning activity going on here. So when you got an exhausted seller selling into a bunch of buyers that are just sitting there not exhausted at all, who's likely to win that fight? Okay. So we've got all these buyers sitting down here. Then on the open of this bar, we have our rock star, which tells us a number of things. There's a lot of stuff inside the Rockstar, but it tells us that, excuse me, divergence has set in, and that we can buy on the open of this bar. Now, let's say you didn't buy on the open of this bar because you were too slow. What if? Let's watch how this. I'm back then. Oh, so you missed the open of the bar, right? Oh, I didn't get in here, but you could have gotten in here, which is a better fill, right? You could have gotten a better fill or even a better fill here, which is what you'll hear me say in the trade room all the time when I take a trade. Excuse me. Sorry. And if I get a better fill, I let the trade room know that I didn't get filled here. I got filled down here. So that's even better than the open of the bar. So we get those all the time too. So again, we're in a channel, right? There's a channel. Price jumps out of that channel like crazy and then slams into a major line of resistance. We also use support and resistance, okay? So it slams into a major line of resistance and then opens below this resistance. This is called a speed tick trade setup. We didn't even need the rock star on this one, okay? We didn't need it because we had this resistance. So we shorted it here. All right. Oversold. Speed tick means the momentum traders have probably been triggered. We have some oscillating inside this bar. We've got the rock star on the open of the bar, and it went up. Yeah, it didn't show that very well. Okay, so we can show you this, and it happens all day, every day, over and over and over again. Yes, we do take losses. We absolutely do, and I am showing you the winners so you could see what they look like, okay, and what our trades look like. We absolutely take losses. It's part of day trading. You will always take losses in day trading, but we're trying to minimize the losses and only take the best trade setups that have the highest amount of confluence of indicators that suggest something is about to change. Okay, prices cannot, will not maintain. Was that a loser? That might have been a loser. Yeah, yeah, that was a loser. So I do have losers in here. Sometimes there's still some steam left in it. Okay. So I'll show you more of these. If you noticed at the bottom of each slide, we're having an event on Saturday. Okay. And you can register for that event here. So I will show you more of these on Saturday and more examples. But essentially, it's going to be the same thing over and over and over again. I'm just going to go into a bit more of an explanation on each trade setup. Okay. So, characteristics of our trades. What kind of trading is this? You really don't need emotion control. See, that was one of the things that I was struggling with so much when I was a struggling trader was controlling my emotions. And what it boiled down to, and I finally had to admit, I just can't. I just can't control my emotions. I can't quit thinking about, well, if I had done this, then then this would have happened, but I should have. And then the whole time you're in a trend trade and it's going against you, and you're like, okay, well, I could get out now, and I could be a winner, or I could minimize my losses. But the rules say I'm supposed to stay in, but if I do, I could lose a bunch of money. So I got all of this stuff that goes on that it just ate me alive. And so when I came up with this, I wanted something where I could get in and out of trades quickly with yes or no answer, black or white, so that my I didn't have to manage my emotions. I'm in and out of trades so quickly that my emotions don't have time to kick in. Okay. Which makes it, dare I say, boring trading. My previous experience with trading was it was very stressful, exciting, but stressful. And I don't need that in my life. Again, yes or no decisions, no maybes, no kind ofs. It either qualifies for a trade setup or it doesn't. The trade management is not complicated at all, but you do have to practice because you can't wait. You can't be too slow. You just have to be deliberate. You don't have to be really fast either. You just have to be deliberate. Remember, I showed you that a lot of times, if you're too fast, you're not going to get the better fill. So you don't want to be super too fast, but you definitely need to be deliberate and know, yes, this is a setup. Yes, I'm supposed to enter here and do it. Okay. And you do that with practice. You practice a couple hours a day, you'll have it in no time. You can do this easily with a single contract or multiple contracts. And I'll show you a trade on Saturday where it's a multiple contract trade, and the way I will scale in trade sometimes. And there's no different rules for different instruments. It's all the same indicators, same rules, same everything. We trade 6 different instruments in the trade room, 1 chart each. That's it. And the focus for us is not on winning trades or on money. The focus is executing your trade plan. That's your only job as the lead trader of your trading business. While you're trading, if you're thinking about money, you're going to make mistakes. You're going to have problems. You're not going to be as successful as you could be, as you would be if you just treat it like a job. So your job is not to win trades. Your job is not to make money. Your job is only execute the trade plan. If that plan needs to change, you change it outside of live trading. Okay, you don't decide while you're trading that you go ahead and change your trade plan. You do that after hours when you're studying all of your trades and you're practicing and you realize, hey, you know what? I might look for 1 or 2 more levels of confluence before taking this type of trade again. Now, that's a theory. Now you want to go test that theory and you want to go find a couple hundred examples of that theory on video, right? We keep a running uh, list of videos of every day and of every trade room we've ever had for probably going on 10 years now. So every day you can review the video of our trade room and you can go through that and you can find all of these examples that, well, of this theory that you have, and then you start testing it and you test it over time. And eventually, if you cannot disprove your theory, because all of us are going to have a theory and they go, okay, let me see if I can prove that theory, right? But that's not really how you're supposed to do this. What you're supposed to do is you have a theory, and now it's your mission to disprove that theory. And that's how you're approaching this testing. You want to disprove the theory that adding another indicator or another criteria for a trade setup is a good idea. You want to disprove that. And if you can't, now you got something. Okay, so most of us go about it the wrong way. We have a theory and then we want to prove it, and then we talk ourselves into approving this theory, and it just didn't. It never does work out. Okay. All right, so we got a special for you guys that joined us here today. We're going to take 20% off at checkout. Here's our shop, or go to our website and learn more about us. And so we'd love to have you come and join us. We'll help you. Um, we'll come onto your computer and help you get everything all set up. You know, we're great at doing remote support and making sure everything's all set up and you're ready to trade. Okay. All right. So, whoops. I've gotten through that. And now, do you guys have any questions for me? Am I seeing the chat? No question? We trade only futures. We trade gold, the GC. We trade oil, the CL, the YM, which is the Dow, the RTY, which is the Russell 2000, the ES, which is the S&P 500, and the NQ, the NASDAQ futures. And we trade the minis, not the micros. Now, This works just as well with the micros. And if you want to get started a little bit slower and trade the micros, you can trade in either one of them. The problem with 5-minute charts, I can say yes, it does. We don't trade it that way because the data that's coming into the markets right now is the best information that we're going to have about what's about to happen right now, right? So if I take information that's building a 5-minute candle, how can I expect that information that was at the beginning of the candle to still be valid 5, 10, 15, 20 minutes later? There are too many influences in the market. The further away you get from right now, the more speculative the trade becomes. Makes sense? The less likely it is that it's that you have a real strong edge. You can use tick charts as long as they're really fast tick charts, but I don't know why you would, but you could. I mean, if you want to combine it with something that you're already doing, but yes, it will work on a fast tick chart, mostly during the most liquid uh, session times. You know, when price is really moving really good. Not so much in later in the afternoons or overnight. All right, anybody else? Happy to answer questions as long as you have them, or just come join us on Saturday. Yeah, we trade 1-minute charts. And again, that's part of the, of managing the stress. We're in and out of trades so fast. Sometimes it's crazy. People don't believe we can trade that fast or that it would work until they actually do it. We have a lot of traders. Again, I've been doing this for 16 years, so we have a lot of traders that pass us by because, we trade from 9 a.m. until noon. A lot of traders that see us, they hear it, they hear me talking, they'll watch a video, they go, "This looks pretty cool. Uh, yeah, I'm going to keep looking." And then some years later, they come back and they go, "Man, I wish I had done that. I wish I had just paid attention to what you were talking about and given it a try." So, you're welcome to come hang out with us in the trade room. Go to our website and you can sign up for a free trade room trial and hang out and see what we're doing. Yeah, I don't have any use for Rinkos. They don't make any sense to me. They make a very pretty chart, but why would you remove time? That's what everybody else is using. So why would Rinko be a good idea other than they make really pretty charts? But time is so essential to measure and to add into your trading. It's not noise to me, it's beautiful music. And you can see how that works on a minute chart if you study it enough. Okay. It also gives time gives me a real good idea of price action, and trying to use a Renko for that is impossible. Excuse me. But I mean, if you've had success using a Renko, then more power to you. It's just that's kind of my opinion. I don't like any of those hybrid charts. Time is everything is relative to time, including trading. So I would never want to remove it. Any other questions?
I'll actually have to suggest we end it there. I don't see any questions coming in, but I just want to let you know.
Perfect. All right. Well, thank you, Patrick. Thank you, Ninja Trader. Thank you, folks, for showing up. I really appreciate the questions. Saturday, it goes as long as it goes. It's scheduled to be like 45 minutes or so. But I get lots of questions and people are interested. I'll stay as long as people want to ask questions.